YouTube. All right, so let's get into it. I'm just going to do an overview for GU because of time. I have quite a day tomorrow. But yeah, the first thing I want to say tonight is another bootcamp is loading, probably real soon in this month. Another bootcamp. I happen to be in touch with a broker, and they have some incentives that could help a lot of guys out here. So I thought it's wise to do a boot camp and then bring them on board and all of that. Well, in the coming week, I would give a proper detail. So I'm still waiting for some things to get settled in. I'll give you proper details or proper information on it this coming week. All right. Well, keep in mind there's another boot camp that is looking. Yeah, that's the first thing. Second thing is how has trading been? From the last boot camp, I believe you all are utilizing everything that was taught. As you can see what went on here. Let me even watch this. Okay. You can see everything that went on here was classic for me. It's pretty clean. All right. So let's start up with this. So from last week, okay, somewhere here, we didn't have all of this information, right? So let's try to make that graded out. Okay, yeah, bring this to the front. Right, so we didn't have all of this information. This was the information that we're privileged to. So we look at this from here. This was previous week's high, previous week's low, and this was previous week's high. This was the expansion. I can see that we had this shift in structure here. Price came back into this other block here, all right, and shifted to the upside. All right, so we have a new trading range. Our new trading range becomes this low and this high in which we are working with. And remember from what I said during the book camp that price was going to be bullish all through the week. They are going to go bearish first and then go bullish the rest of the day. The open high, low, close idea. You get. So now inside here, what can we identify? We can identify we have this other block here. All right. We have this low resistance here, or this liquidity run, or inducement, or short-term low, or internal liquidity, whichever it is. And remember from my video way back, if you can remember, that there's a format to internal and external liquidity, that when we take internal liquidity, we then have permission to do what? To take external liquidity, which then means price was going to run this low and then go to this high. Of course, we have hindsight, we've seen it, but that was what everyone should have been expecting. So we push this a little bit to the right hand side. We can see how price came down, serves that short-term low that we identified, and I identified this as well during the overview I did. I don't know how many of you. Sorry, hold on. Okay, so we identified all of that, and then we can start our analysis from Monday. So basically, the overview I want to do is from Monday down to Friday. how would you have played price? Because you can see how price kept on delivering perfectly, giving you that series of higher lows, higher highs, higher lows, higher highs, price coming back into imbalance, coming back into other block, giving you market shift in break of structure, market structure shifts, whatsoever you want to call it. And price kept on going until it delivered to this external liquidity. And you can see how that this was, let's say, the bigger picture. We have this internal liquidity and external liquidity, but you can see how price was delivering, taking down out this uh, interweek or interweek or intra-week, anyone intra-week external liquidity, coming back to take that internal liquidity, going to take external liquidity, coming back to take internal liquidity. Very, very clean place. Very, very clean place. But here I am. I'm going to be showing you how price delivered all through the week, and then we are going to be at some point overlaying EU. We're going to be overlaying EU to show you the SMT idea. I know a lot of people are still finding it hard to get SMT. It's pretty much easy. So let's see what we have Monday. So we can go to the 15 minutes and see how price played on Monday. On Monday, I did EU with my masterclass guys earlier today. Well, and was pretty much interesting. Okay. So on Monday, and now remember what I used to tell you guys, or most of the class we've had, opening and all of those things, that if you are told you want to be buying, what do you want to keep in mind? That you want to be buying below the weekly opening price, right? Below the daily opening price and below the section opening price. Remember, I said that. If you look at, let's go back to the 1 hour set. If you look at everything that happened this week, you'll say that all the major moves.
Your screen is static. Is it from my end? Sorry.
Okay. You discover that all the major moves that happened below. Remember, this my yellow line, if you've been here, is my weekly opening price. You can see drawn out. You see that all the major moves, all the major expansion happened where? Below the opening price, the weekly opening price. If you look at GU as well, EU rather, if you look at EU, you see that EU happened at the same place. All the major moves happened below weekly opening price. Okay, so now 15 minutes. That's the first thing to keep in mind. To make sure you keep in mind. So is you want to be buying below opening daily price, the midnight opening price, and midnight opening price is 0000. I know a lot of people used to ask this question, and I've answered it 1,000 times, but so that we are on the same page today. And I will not have to answer the question. You can see that midnight opening price is 5 a.m. Nigerian time. 5 a.m. Nigerian time. So the day opens 5 a.m. Nigerian time, which is 00 Eastern. You want to be buying below this price, right? And then lastly, you want to be buying where? Below Asian range, and let's say standard deviation, all of that. Now, let's first pay attention to standard deviation so that we can get that out of the way. Monday, standard deviation, you have, this is standard deviation 1, this is standard deviation 2. You can see that this push up happened where? At 2 standard deviation. All right. And I told you that when you mark out your standard deviation, that you look to the left to find something. Remember, to find something you can play at the left, either an imbalance, either an order block, either a liquidity sweep. If you look to the left here, you can see how I marked out this um, imbalance here, and I marked out this order block here, which price reacted to at the first instance. But the second one, can see how this was the whole entire push down. This was potential area for um what's it now? Potential area for accumulation, right? Yes. So you can see that this major moves happened here. It happened here. Now, the question is, when is the right time for you to know, or when is the right place for you to play? This is where I said that if you do get an SMT, you shouldn't shoot. I know a lot of people don't know how to play the SMT, but for me personally, the SMT, and when I say SMT, people get confused. SMT just means divergence. So I'm going to be using the word divergence in place of SMT so that everybody is on the same page. If I don't get the divergence between EU and GU, I'm not going to shoot. Now, if I'm to take 10 trades, 8 out of 10 trades is going to be divergence based. All right. Now, all through the day on Monday, and remember that Monday you don't want to get aggressive. You just want some context on Monday, right? But if you were to play on Monday, what were you going to be looking at? So price rated this short-term low or inducement inside that potential area for accumulation. All right. And London section price kept on dropping without giving any break of structure to the upside. Where is Monday now? Okay. So this is Monday without giving any break of structure. So this break of structure happened. Why would you not play this break of structure here? Because if you have to look at this break of structure, I think it kind of swept Asian low, or did it? I don't think so. Why would you not play this break of structure? Because it didn't happen in London. Remember the timing. Timing matters a whole lot. And price kept on delivering to the downside all through London without giving a break. So if you were looking to buy this guy, New York was your section to play, right? There was no break of structure here. Price kind of stalled here, but there was no break of structure. We keep on looking, price kept on creating the lows and the highs. Lower low, lower high, lower low, lower high, lower low. And then we had that break of structure here. And after having this break of structure here, all right, which is where we are going to magnify and to get your idea. So we had, let me move this up a bit. We had our break of structure here, right? I put this to the top, and then I can say swing, right? And you have a swing here, and then you have this swing here, right? Sweeping this low, all right? X. So what is this? This is what? This is um um let's put it as settings. Let's make that's to take. Okay. So this is what? This is accumulation. And then the manipulated price, right? And then distributed. Does it make sense? Now, I haven't done that. Okay. Now, where would your where would you have played? Because the question is, all right, so after all of this, where would I have played? Where would I have positioned my entry? But before we look at the entries, let's overlay EU. Let's overlay EU. And like I was saying to my guys this morning, that the reason why I prefer, and I know some of them are with me here, so they'll forgive me that I'm saying things that are meant to be masterclass. I'm giving it here. All right. Now, the reason why I prefer using my candlestick for divergence than the line charts is because of one simple reason. Now, remember that when we are looking at the divergence, we want something like this. For this now, we want the first pair to do something like this, create a lower low, and then the second pair fails to create a lower low. So this creates that low, and this creates that high, which is the divergence. Now, I know this is a candlestick. This is a chart like line charts pattern, but there's a reason why I drew this. Now, I like the candlestick because the candlestick shows me that the first one is going to sweep the low, while the second one did not. And the only way you can know a candle that is going to sweep liquidity is the candlestick. The line chart is not going to show you that most of the time. Do you get? That's the reason why I prefer it. But at this point, we are trying to look for our SMT. Can you spot an SMT in this area? If you look at, let me remove this. And let me remove this. If you look at this carefully, let me shift this up a bit and delete this line. Look at this place and look at this place. This candle here, this went up. You can see this low to this low. And if you look at this place, you can see this low, this high to this low. You can see that this guy swept this low. Why this guy left that low? You see the SMT, right? So what you need to play, what you are looking for is in place. So there's already an SMT, so we don't need GU anymore. We can EU anymore. We can remove that. So now that we have confirmed that there was an SMT, right? I don't think I need to show that. Where would your entry be? Number one, either you all of this push down, 50%. All right, stops below this low. Now, question: what is your first target? I want someone to answer that. What is your first target? Anybody?
The external liquidity.
No, wrong.
15 minutes high.
No, wrong.
High.
No, wrong.
1 to 3.
Thank you. Thank you. Your first target will always be your 1 to 3. The first target will always be your 1 to 3. You see, this idea of people not liking to take profit at 1 to 3, yeah. Is the only way you can grow your account is by consistently taking your 1 to 3, taking some money off the table at 1 to 3. So your first target 1 to 3. Your second target Asian high. Asian high is like a 1 to 6. Your third target, you can now target external liquidity. And you can see that external liquidity didn't come until Thursday. And that was like a 1 to 17. But that was your first entry. That's the first way you can look to enter on Monday. How else can you look to enter on Monday? Now, in this area, on a lower time frame, maybe 3 minutes, maybe 1 minute, maybe 15 minutes, find an imbalance. There will always be an imbalance. Now, the reason why you would have not played this imbalance, you can see that price already filled this imbalance here. So there will be something around this area to play. You look at the 3 minute, let's check it together. Thursday, Wednesday, Monday, all right? So let's see if there's an imbalance there. Is there an imbalance? Not necessarily. There was no imbalance. Or am I the one not seeing it? So no imbalance. Let's say 15 minutes. Let me see if I can spot one on the 15 minutes. Okay, no imbalance. So the only way you could have played on Monday was what? Your 50%. Let's reset this again. So that was Monday. That was your Monday. Putting together everything we did over the boot camp. No adding anything new or anything special. Just the same thing. So Monday, price expanded. And then we had Tuesday. Now, I want to give this out. Oh, wow. Can you guys give me some minutes? They restored the lights. So I'm not going to be in a rush this night anymore. All right. So I'm back. Okay. Now, I know these are things you know already, but just to give some emphasis to it. Now, every single day, you are going to have an high and you are going to have a low. Remember, opening price, open low, high, close, black. You are going to have all of that. Now, every day's high and every day's low is a point of liquidity that the second day is likely to be attracted to sweep. You get? Now, you can now use that idea or that format to use it like every day's high and every day's low is some kind of internal and external liquidity. Don't worry. You'll get it. Let it sink. Let it sink. You get it. You'll get it. Now, let's do it like this. Let's now annotate. This is let me use my candle here. This is Monday's low, right? This is Monday's low. Where is Monday's high? Of course, Asian high. Remember that the new day started here. So this is Monday's high. Have you noticed that Asian section and central bank dealers range, most of the time, they usually fall between that Asian high or central bank dealers range high and low, and Asian high and low used to fall between external and external liquidity. Let me use external liquidity, not internal liquidity. Which brings the concept that I said that you want to be buying above Asian high. Necessarily is after they've swept liquidity. So something like this, right? Instead of you looking to buy here, you can do something like this, sweep that high, and then give you that push. this becomes that liquidity sweep. Do you get? So we had this as Monday push up. So this is our range now. We can use this as a range from this low first to this high. All right. So we want to be making sure that if we at all we are buying, we want to be buying at discount and want to be selling at premium. All right. Now Tuesday came. Tuesday. Look at what happened Tuesday morning. They swept previous day's high. Ignore Asian. I know this is Asia. You can see it is boldly written Asia. But look at this. They swept previous day's high. And if you know what I said now, if you are attentive, that previous day's high serve as what? External liquidity, right? So they did what? They took external liquidity. And what is the rule of external and internal liquidity? When we sweep external liquidity, we then have permission to go and do what? To go and take what? Internal liquidity. This becoming the new external liquidity, right? So let's mark this out again, external. Let's mark this high out. So this will be for a later time, external liquidity. We have taken previous day's external liquidity, which is above Asian high. You guys with me out, so we should call it a day. No, I feel I just.
Aaron, you're not speaking to yourself. We are yes.
All right, perfect. Now, we sent external liquidity. Now, look at this. We had a breakout structure somewhere here. All right. Price came back into this imbalance here. Taking out this, if you shift this in price now, you know that price is now bearish. So they took this external liquidity now. Remember, there is a shift in price. So they took this external liquidity. They came back to take this internal liquidity, trying to push overall to that range internal liquidity, right? Okay, but you couldn't have bought here. But there was something that already signified for you that what? Price is ready to push down. After taking that previous day's high, I'm taking out that external liquidity. Which was what? Your SMT. Okay, I said I was not going to use SMT, which was a divergence. Again, let's overlay EU. And let's change this to what? Line chart. And you know to candlestick, and you know why we want to put it at candlestick, right? So let's see. Was there a divergence? Can you see it? Do you see it, or should I draw it out for you? Look at this high. Look at this high. Look at this high. Look at this low. Let me use the brush. Meaning what? Price is ready to go down. So we can remove this now. Now, let's look for entries. Entries in London. So what was the London range? We have this high, we have this low, we have this low. So this becomes what? An order block. Let's go to this 3 minutes. Let's see, maybe we can have some kind of imbalance to play. Tuesday, right? Yeah, Tuesday. Okay, so this was Tuesday. This was that high. So all they just did was, okay, there was an imbalance. So let's say your trade somewhere here stops somewhere here. Now, question again, question. what is your overall target? Overall target is what? Let me see if you are really attentive. What is your overall target?
Internal liquidity.
Why internal liquidity?
Because it has an imbalance below it.
No, that's 30%.
Okay.
Yes, sir. We will target the previous lower low, sir.
No, necessarily.
Because
All right.
price is bullish.
Because price is bullish. Thank you. Because overall, the first thing we are looking at is what? We are taking external liquidity. We then have permission to take what? Internal liquidity. So there was no point for anybody to want to take this low here. Because price will not get there. The target should be internal liquidity. And internal liquidity will be what? 50% and beyond. So give or take, look for a low that stands out 50% and beyond, which will be somewhere here, which will be this low. Isn't it? So that was like a 1 to 5. So now, London came in, we had all of that in London, and then New York, price delivered back into that imbalance at internal liquidity. Magnify this. Let's go back to our 5 minutes on Tuesday. Magnify this. All right. Look at this. Look at this liquidity sweep here. Keep your eye on it. We are coming back there. We had this high. We had this low. Price broke structure. Price came back into this place. Probably your stops are somewhere here. But are we so sure that price was ready to reverse? What are we going to use to confirm that is price really ready to reverse? Okay. Divergence. Now let's overlay EU and let's see if EU give that divergence. So we move this up a bit. Was there a divergence?
No.
No. Are you sure?
Yes, I'm sure.
There is a divergence.
Pause.
Okay. So let's trash this out. So if you are high, say high. If you are nay, say nay.
Nay.
Nay. Okay. I was expecting someone would say I should go to the 3 minutes.
I was about saying that, sir.
You didn't say it. About saying it is not accepted. You didn't say it. So let's see on the 3 minutes. Tuesday, right? We're on Tuesday. So let's magnify that place again. Was there a divergence?
No.
Yes.
Okay. Some say there was a divergence, some is saying there's no divergence, some say there's a divergence, some is saying there's no divergence. Alright, because of time, there was no divergence. Because they were just forming a low, This went up, this went up. There was no divergence. Now, because the idea for me is, of course, like I said, 9 out of 10 trades, 8 will be divergence motivated. I could have easily played this. But I mean, this has given me the place for the day. And might,
before.
I might
That's
want to, I might
1324
want to sit out.
EST time. That's when the divergence
This
happened.
is the problem I used to have on the call. When you are not, can you just mute your mic? Thank you. Because back to this place now. Now, if I took this trade here, and this is where you need to be sincere with yourself. If you took this trade here and your stops is somewhere here, right? If price were to flow into Asia range or Asian section, I see no reason why your stop loss should still be there. It's irresponsible. Now, my stops would have been at break even. Price would have taken me out if it were to be me. Now I'm saying the truth. If it were to be me, price would have stopped me out. But I doubt even if I would have been on this trade. I doubt if I would have been on this trade. Okay. But now, price has showed us that it wants to go up. All right. Let's go back to the 1 hour. Let's see Tuesday and Wednesday so that we are clear. Where's Tuesday? This Tuesday. This is Wednesday. Okay. All right. Tuesday, Wednesday. You can see how where this other block that price kind of came into, we swept this internal liquidity. Price shifted down. Still took this low. I know there are a lot of people that used to do a lot of things at that low. I'm not a fan. I'm a fan of classic, old, rugged market structure. So, Wednesday, we have that. Remember that overall, we are targeting this external liquidity overall. Remember. And remember our opening price idea. Don't let that get lost on you. Because I'm not saying it does not mean we are not utilizing it. So Wednesday came in. All right. Wednesday, I said Asian I is what? Would be serving as external liquidity, and previous day's low would be serving as what? Internal liquidity. I said that. Don't let that get lost on you. Now, if you had to utilize this on Wednesday, we didn't take external liquidity. We didn't take internal liquidity. How would you have explained that? What's your explanation to that? What would you do? What would you have done if you were in this scenario? Oh, yeah, let's see. Let me see if someone is attentive enough.
I'll buy below discount.
Yeah, of course. You must buy below discount.
Order flow.
Order flow, meaning
Price is respecting market structure, kind of. And the last push down that swept that the last push down into this fair value gap, that's the other block there.
I'm still trying to get what you're trying to say.
I'm trying to justify what made price did not take the previous day low.
Okay. Yeah, I'm with you.
I will buy below Asian, and I'm going to consider the central dealers the CBDR range. I think you said it earlier from the beginning of the call.
Encore. No. This is right staring at everybody's face. This thing is staring at everybody's face. Come on, guys. This thing is.
Market already broke structure from the from the previous day,
Mm,
and I've given another flow of to the upside.
mm-hmm.
I tell you, the other block, the price came into
Mitigation of construction.
Inducement. Are we going to consider the inducement after the imbalance?
Oya
The
Kati, hand before the year.
the range price is at discount.
Oh my God. Yes, price is at discount. I agree. There's just one thing is staring at all of you like this. Just
Time and
one
price.
thing. No.
Imbalance.
No.
Okay, price came to an imbalance, and there was a structure we had before that price was supposed to take the highs. So price gave us.
So that wait, you're not in line at all. So that we don't waste so much of our time. Number one, all of this is internal liquidity. We came to take internal liquidity. That means we then have permission to go and do what? Take external liquidity. This high was still standing. This was the external liquidity. The price was still in form. All of this Asian high or Tuesday low, which has taken internal liquidity, was not going to be considered anymore. What's it on? You see, when I say you people used to listen to it, but you don't used to apply it. This is why a lot of people get blown out. Do you get?
Can I ask a
You
question?
watched it. Yeah, you can. All right, someone is asking a question.
Okay, I was actually watching this trade that Wednesday, and I was expecting price to take out Tuesday low before now going for the expansion to now take that external liquidity. So from what you're seeing here now, once an internal liquidity of a range has been taken, does it mean it doesn't make sense for price to like take any other lower liquidity that may form when price is leaving after taking the internal liquidity range? Is that what you're trying to
Well,
explain?
I don't want you to confuse yourself, and I don't want you to confuse me too. The idea is simple. Remember, we are coming from internal liquidity to external liquidity to internal liquidity. In here, price has taken internal liquidity and reacted off an imbalance, giving a break of structure. Price, of course, price is not going to give you that complete movement you want, like just go like this, go like this, go like this, go like this. Of course, no, price is not going to do that for you. All right, but you could have had it in mind that one is external liquidity has been raided. Check. External liquidity has been raided. Check. You have formed a new low. Right? There's something here that I know a lot of guys here will know. All right, but we have formed this low here. So there was no reason why price should come for this low. Only if we want to entirely go bearish. And this is at a crucial point at an imbalance. After taking internal liquidity, remember, this is no longer an internal liquidity to be considered. This is the internal liquidity. Sorry, guys. Hello? All right, guys. Let me quickly explain this before I take a 5-minute break. All right. We're coming from this. This was the internal liquidity. This was the external liquidity that was formed. External liquidity was raided. A new external liquidity was formed. Meaning we have to now target a previous internal liquidity, which was this, right? And after taking that internal liquidity, we formed another low, which is an internal liquidity. It doesn't make sense for them to take internal liquidity, then come back and take internal liquidity, and then go for external liquidity. It is internal liquidity, external liquidity, internal liquidity, external liquidity. Not internal, external. Do you get? So we are taking this internal liquidity. We formed a new low. Now our aim is external liquidity. So this low is kind of protected. Price was not going to raid it. So reminisce on that. I'm coming. 5 minutes. Yeah, I'm back. So any question? Did you sing? Or did I confuse you?
No, sir.
No, sir. No, sir.
Okay.
I have a question, sir.
All right.
Yes, sir. I was just going to ask, in situations where for example, now,
Please, can you speak up? I can barely hear
okay,
you.
am I audible now, please?
I think you are.
Okay, thank you. I was just going to ask, for example, on the 4 hours time frame, situations where the internal liquidity and it's not that visible, like it's not revealing himself like that. What do you do in situations like that, please? For
There's
example,
a
now
reason
this
There's a
EU,
reason why every. Okay, continue. So that I
for
don't.
example, this EU chart that you just displayed, the percent range on 4 hours seems not to have a very visible internal liquidity. What do you do in situations like that, please?
The 4 hour doesn't have visible internal liquidity. Of course, what we're doing here is intra-display, higher time frame point of interest, lower time frame execution. We are going to get most of those information on higher time frame. Higher time frame, you just have two things. In fact, if you have to look at the higher time frame, right? The only two things you have on the higher time frame is you have this low, you have this high. This is your external liquidity. This is your, somewhere here is your internal liquidity. That's the only two things you have on your 4-hour time frame. You don't have all of those other ones I'm saying on the lower time frame. Do you get? On the higher time frame, you don't have so many informations. Higher time frame, you just want to play something. You want to like swing. Let's say you have your limit somewhere here, your stop somewhere here, and then your targets will be here. External liquidity. You don't really necessarily have all of those informations that I'm giving on, or that I'm trying to show you on internal, on lower time frame. I believe you understand what I'm trying to say, because you have to look at the 1 hour here. In fact, there's a lot of things that I was looking at while I was back testing here. If you look at this place now, right, you can see that after we took this high, right, price came back to take this inducement or internal liquidity, came into this imbalance here. And you can see how we broke that structure, low, high, low, break. You would have taken a trade somewhere here, all right? Your stops would have been somewhere here, and then your target, sorry, just trying this one. Okay, your target would have been this high here. Do you get? But these are intraday plays. And I'm kind of giving a whole lot of paid content, a paid mentorship source this night. Again, my masterclass guys, I'm sorry, all right? Don't be offended.
All right, thank you, sir. I understand.
Yeah. But don't worry, this video is recorded. Yeah, I think, am I recorded? I'm not recording, no. It's a lie, I'm recording. This video will be posted on YouTube, all right? So take your time and watch it. Take your time and watch it. All right, so we can continue. So the answer to the question is what? The reason why we are not going to be considering this play is because this external liquidity has not been what? It has not been raided. Okay. Now, we're somewhere in here, potential area for reaccumulation. Price came back into that place. So on Wednesday, price came again. We had this Asia low, all right? We had the central bank dealers range. We have 1, we have 2, we have 3. So somewhere inside 2 and 3, we have this imbalance here. We had all of these lows. I don't know, whichever it wants to be, but that's not the way I play. Now, price and time came in. We had this low, we had this high, we had this low, we had this break of structure here. Now let's go to this 3 minutes on Wednesday. And let's see if we had play. And it's 3 minutes. Now we overlay our G, our E, and we look for our SMT. I don't think there was an SMT on Wednesday. Was there? I think there was. I'm not sure. Well, there was actually, but it's not an SMC that you will really see spot on. If you look at this low and you look at this low, you can see that this candle swept this low, why this did not. So you can see that your SMC there. We broke that structure. Of course, GU was not the better play on Wednesday. EU was. You can see how after EU broke that structure, price came back into this imbalance and EU gave that play, but GU did not. The only thing that made sense for GU was after that break of structure, probably you play this, I think they call it the breaker. Probably you play this breaker here, your stops below here, and the breaker I'm saying is this candle here. All right, your stuff. But classically for me, Philip, I'll never play that. I'm not a fan of breaker block. Right? If I was to play this, my limit would have been somewhere here. Maybe at this low here. I'd have wanted to play this low here. My stuff somewhere. Right? And price would be like, hey, and I'll be like, oh, price will pick me on Wednesday. Oh fuck. Sorry for using the F word though. But that was for Wednesday. Target was what? Target was what?
External liquidity.
Now that we have taken external liquidity, we have a new external liquidity, right? And this was the expansion. So this was the expansion we would have played to get our new internal liquidity. Okay. So we have this as external liquidity. So let's mark this out. External and internal, right? Why? You remember if you go to the 1 hour again, which makes it clear, where is that place of the 1 hour? So it's not as if I'm just doing my thing. You can say that this low, this low, kind of an internal liquidity. Yeah? So we took the internal liquidity there on Wednesday or on Thursday morning. Now we are trying to look for our play. So I didn't think that, sorry. So after we took the external liquidity on Wednesday rather, it then started dropping in EU to come and take what? Internal liquidity. And then after taking that internal liquidity, tapped into that imbalance, gave that break of structure there. Of course, probably maybe you entered at this imbalance here. But first things first, let's see if this trade is confirmed, if we should take this trade. And the only way to confirm that is what? Your divergence. Yeah? So, well, for me, some people might have other ways to go about it so that I can put that disclaimer there. But for me, the only thing that will confirm that trade for me is my divergence. Was there a divergence?
Yes.
Thank you. Perfect divergence. Very clean. I know some people are still like, where is it? I can't see it. I can see this blue here. I can see this again low on high. Let's magnify. It's as if it not do the divergence. Actually, it's not the divergence.
That was not the one I was referring to, sir.
All right. So
Yes.
which one are you referring to?
Take your go to your right a bit.
Okay, yeah, I think I have seen it now. So you have this here, and then you have this here. Right? But that was around central bank dealers range, probably out of my trading time frame. Probably out of my trading time frame, of course. Well, of course, probably the next day as I'm on the chart on Thursday, I'd have seen that. So yeah, we already have our confirmation to buy that. So we had this break of structure. Your entry, maybe you put your entry here, or maybe you put your entry here, and then price started leaving. And then the next day, Thursday was super clean. I believe everybody agreed with me. After you add that break of structure, let's go back to the 1 hour so that you see it. Set this. Expand this. After you add this break of structure here, and say high, low, break. The only thing that made sense inside all of this was what? This imbalance and this internal, what's it called now? Right? Let me check out something. Let me check out something. And the idea that people just used to take my word for it, and they don't really used to check if I'm right or wrong on everything, scares me sometimes. Because I had to check if that entry, if that imbalance was at premium or at discount. I had to quickly check up on that. And I feel it should even be this slow. So you can say it was at discount. So I'm correct. So price came into that imbalance on Thursday. Price came into that place. And then you had that break of structure. Now let's see again. Let's confirm if we had an SMT. I'm not sure. I think the SMT occurred on the 1 minute. I'm not sure. But let's check. Since we are doing it together. Was there an SMT? Guys, was there an SMT?
Yes.
You did not see this one. You're going tomorrow morning when you wake up, don't use your face urine to wash your face. Because this one was so clear. You can see.
There is.
It was so clear. Don't use your post urine to wash your eyes. I'm sorry if you feel offended. I'm just joking though. So yeah, that was that. That was the SMT to confirm your trade. Price came into that imbalance, give you that break of structure. Probably you played the low here. Then you had that your perfect sniper. But me, I would have played the open of this last down candle. Just giving myself some room to breathe. Then what would have been your target now? Your first target, 1 to 3. Your second target, this guy here, external liquidity. Third target, let's say overall. So let's see. Oh, we deleted all of those entries. I wanted to see how many R we had over the week from internal to external. Okay. Now, so question, now that we have a new, okay, yes. Now that we have taken this external liquidity, let me see how many people really are attentive. Maybe this is where everybody will hit 12. So you're on a straight line, 12. If you say anything wrong, just take 12. Now that we have taken external liquidity, we now have permission to take internal liquidity. Which internal liquidity are we taking? Or what do you think we should do?
Okay. Now that we've taken
Wait. Who's talking so that I can know the first person that will talk 12? Okay, continue.
Alright, from what you just taught this night, since we've taken external liquidity, is to come and take internal liquidity of our main range that we are dealing with. So 50% and beyond, it would be a good place to look at.
I'm still waiting for something to say. For you to say. All right, 60%. You try. Now that we have taken this external liquidity, this H4 external liquidity that we are playing, right? I think I should even delete all of this since we are done with it, right? Since we are done, I think we can clean all of this. Remove all 41 drawings. All right. Now, where is our new trading range? Our new trading range will be from, let's say, maybe this low to this high, or maybe this low to this high. But either which way, or let's check the daily. See the expansion of the daily. All right, so the daily shows us that expansion. Now, the daily as well is aiming for an external. Or is the daily aiming for an external or an internal? I think that should be a better question. Is price bullish or bearish?
Bullish.
Current price is bullish.
Since price is bullish, that means price is aiming for this high, right? Now we have a new range, which is this low. We already have this low. Now we don't know if this is the new high. If this is the new high, then we can just say we mark out this low here, which is our range, to this high here. And then we are looking for internal liquidity to be swept. So probably maybe, and from that internal liquidity, the first imbalance that stands out is this one here. So probably we can't say this is the internal liquidity because this is not at 50%. But maybe they might react here. You don't know. If they don't react here, probably maybe they strip this low. But if I was the one, where do you think I would have played? One catches my highs, and I think it should catch everybody's highs too. To be this one here, this internal liquidity here that has this imbalance here. Should it make sense?
It makes sense. It makes sense.
So I'm not necessarily saying they will come all the way here, but normally this is what they should do. And the idea that they even did this here makes a whole lot of sense to me. So this wants to give us that schematics now. Probably break this low here and then go down, creating this new overall external, and then start aiming for internal to then go back to take external. And I'm not necessarily saying that is what is happening. I just continue to the upside. But with everything I said, I feel intraday you should know what to do. Just look at your Monday range, your Tuesday, your Wednesday, mark out the high, the previous day high, previous day low, and all of those kinds of things. Do you get? Do you understand? Believe you me, this thing I just taught you guys this night, trust me, it just popped in my head today, this morning, while I think I got up a bit earlier and I was trying to do some back testing, and everything just made sense to me that look at the way these guys are playing internal, external, look at the way it was aligning with, and I spent a whole lot of time trying to figure it out before all of that. Do you get? So don't think maybe this guy is very good. It's just those things you do. Those things you are just not doing. All right, that will be it from me. Let me stop recording.